What's good, guys? Welcome back to another video. The trade from yesterday ended up being a resounding success, although I did get stopped out, but at least half the comments that from yesterday's just live trade on X is like, yeah, amazing call, smacked this perfectly. Few people got stopped out alongside myself. I'm sorry about that, because little would I have expected that price would sweep us out just barely and then just dump heavily, just like what we predicted yesterday. But at least on the overall setup, we got it right, like almost perfectly. And so that puts us up to 126 out of the last 160 trade calls made here on YouTube. Like, check this out. You can't make this stuff up. Like, just barely get stopped out and then boom, picked up. So super happy to see you guys win. Unfortunately, I myself did not end up getting such a good result, which is right now Bitcoin is getting dangerously close to certain levels. And it's not looking like we're going to start pumping anytime soon. Like, is this the end of the bull run, or do we still have room to continue? I'm going to break that down, and then we're going to get into the intraday setup for Bitcoin. And yeah, let's get into it. So a couple things to understand is that, yes, this is overall still a bullish order block until we get a candle close underneath, what is this, 100,800. You're not technically bearish yet. Now, on another note, if you guys remember my videos from a couple weeks ago, the main level that we were looking at is this one, right? At 108,200. The reason why this is so important is because if you get a candle close underneath this level, this would be known as a bearish change in state of delivery, which means that price from this point onwards will treat this as future resistance and to dump from that point onwards. That is obviously very dangerous for crypto, right? You don't even have to go through this one. Like, even just this one on the weekly chart here is already pretty dangerous. Now, just to give you some context, the last 3 weeks, price traded quite a bit below that level, right? Each of the 3 weeks, we went underneath the CISD level. In fact, for most of the week, if you guys recall from the videos that I've been making over the last 3 weeks, for most of the week on these last 3 weeks, we were trading underneath that key level. It wasn't only until the end of the week, maybe Saturday, Sunday, where we completely rebounded. We saw, buying interest come back into the markets to push us above that level. The fact that we're here on the 4th week in a row at the moment leaves me, a little bit concerned. But we don't want to be jumping into conclusions right now because there's still 5 days and 15 hours until this week closes. I know it looks really bearish right now, but a lot, as evidently that we've seen for the last 3 weeks, a lot can change throughout the course of a week. For the most part, I will remain bullish until proven otherwise. In fact, that this exact mindset has saved me from so many potential losses in trading that I would have, incurred otherwise, which is, yeah, I know it looks bearish, I may think it's bearish, but ultimately we need to read what the market is actually saying. And at the moment, market structure is still pretty bullish. And this, kind of break of this swing low right here is at most a change of character. You're not going to get much of a break of structure until you get to this level at the very least. And so far, there's still hope that, if you close above this level right here, you're still going to be looking pretty bullish in the fact that, you're still filling in this order block. We're spending 1, 2, 3, 4, 5 weeks now at this order block, but it is still a bullish order block, and there is still the chance that price continues going up. That is going to be, on the bullish side of things, right? Let's consider the other side of the equation for a moment, because it's very dangerous as a trader to just get bought into one ideology or one direction and just like, oh yeah, the job's done. The truth of the matter is that we are now dangerously close to this swing low right here, and this swing low is also dangerously close to this swing low, which means that these at the moment is forming relatively equal lows. If you know anything about the market, is that relatively equal lows and relatively equal highs tend to be magnets for liquidity, meaning price is attracted to these levels. Now, just because price will be attracted to these levels doesn't mean that, this is the end of it and, price is just going to continue dumping. This just means that potentially you may be looking at a movement all the way down to 98,000 and potentially slightly lower before price continues on with the trend after sweeping out all of the liquidity here. That is a likely scenario. It's exactly what we've seen each and every time. For example, here with the relatively equal highs, once you swept it, ultimately, you kind of reverted back to the mean. But overall, what you need to understand is that in terms of overall structure, right, if you look at really high time frame structure, you're not out of the game yet, in the sense that you can draw a fib from this low to this high. You'll see that this fair value gap here on the weekly chart lines exactly with the 0.705 of the fib. Am I saying that we're going to get all the way here? I don't know. But if we get all the way here, this will be a decent place to buy in, where you will have swept underneath the range low, just like what happened when you swept above the range high. You revert back to the range low. As you sweep the range low, fill in the fair value gap, there is a very high possibility that you could revert back to the range high as well. But a lot of this hinges on the fact that we do not get a candle close underneath this level, at the very least by the end of this week. If we manage to rebound from this point onwards, that's an amazing sign. If not, if we get a candle close, then this is going to become a very huge area of resistance, and price is very likely going to form some sort of a heads and shoulders pattern at this level right here, right? You retrace back into here and you're going to break below the neckline. Once you break below the neckline, yeah, it's going to look pretty bad for crypto. But so far, it's a little bit too early to tell. And the beautiful thing is, this week, throughout this entire week, we have news on every single day, which makes this kind of like a unicorn week, where most weeks we get Monday, Tuesday, usually without news, maybe Friday without news. And so the only viable trading days for the week tend to be Wednesday, Thursday, or whatever. But so far, we have news on every single day. It's going to be a pretty beautiful trading week so far, and no point, worrying about the long term when we could be making so much money in the short term. And so, yeah, let's get into the intraday setups. So one thing to know immediately is that we do not have news today. So ideally, you want to focus your trading on Wednesday, Thursday, Friday, rather than today, if possible, for reasons that I've already discussed in the past. Like so far, I'm at 126 out of 160 trades called. So that's 34 losses to 126 wins. Most of these 34 losses have come on 2 occasions. One, Mondays. Mondays tends to set the opening range for the week. Most Mondays do not have news, which leads me on to the second point. Most of these losses comes on non-news days. Non-news days are very tough to trade because price action requires a catalyst. There's something that most people don't think about. There needs to be a reason for price to move. Price doesn't just move because it moves. I'm sure there is a lot of other arguments like, the market makers decide that they want to move the price, they will move the price. And that is true to a certain extent. But how do we kind of like systematize this to a point where we are consistently only getting into the highest probability trading days? And that's going to be through the use of catalysts. The beautiful thing about news days is that like every single market participant is going to be looking at that news day, right? That news hour, and they're going to be like, okay, there's news, so I expect other market participants to, get involved in the markets. And that, it almost becomes like a self-fulfilling prophecy where because everyone is expecting everyone else to get involved in the market, price ultimately moves very aggressively during news. It's the same thing that we saw yesterday. Now, yesterday was a very rare Monday. Usually only one Monday every month where there is news on Monday. And if you take a look at exactly when price starts to just dump aggressively, it is at 10 a.m. 10 a.m. is also when the news dropped. Once the news happened, boom, right? Big aggressive movement. Within 30 minutes, you would have made thousands of dollars if you were in that trade. So you see now why we want to be prioritizing news days. Whereas on the flip side, non-news days could look very much like this, where sure, there is a potential setup, but is that surely the best day for you to be trading? I'd argue not. Going back into the charts today, it doesn't mean that we will not have a setup today. It's just you want to keep in mind that today will be a slightly lower quality day, a slightly lower probability day compared to what we got yesterday, where all the timeframes were aligned and it was just a clean, easy, like there was no dilly-dallying around trying to see, oh yeah, there's a reason that price is going to go long. Oh, there's a reason that I think price is going to go short. No, yesterday was super clear. It's just short. You sell exactly into the timing. Price action delivery was clean. That's why we trade on news days. Ideally, you want to be trading tomorrow, not today, but still, there is a valid setup today. So daily chart yesterday closed bearish. And so today you are also looking for a bearish trade. If you go down to the 1 hourly, we have 2 PDOAs that are very clear right off the get-go. One is going to be this fair value gap, and 2 is going to be this order block right here on the bearish direction. And in the event that price retraces into either one of these, it's going to be a valid setup. This is the exact same framework, by the way, that I've used over the last 300 days to do stuff like this, where I mark out the level. If you guys follow me on Twitter, I would have told you guys as well, like, hey, key level we marked today is starting to get hit. Once it gets hit at the timing that we mentioned, 9 a.m. is when you come into it. Boom, you get your first CISD. Obviously, this is where I got stopped out, but ultimately, you still stayed within this area. You still respected this key level right here, and then boom. The reason I'm able to have this kind of precision is using this exact framework that I'm using right now. Which, by the way, speaking about frameworks, in 25 days from now, I'm going to be launching a free masterclass breaking down this exact system, step by step, like the full system. You're going to get it if you sign up to the free masterclass. Now, I'm dropping the link later today, to everyone that is in the newsletter. If you want to be part of the first wave of people that gets to sign up and gets first dibs, then click the first link in the description box down below, sign up to the newsletter because it's going to be launching later. Otherwise, these are the 2 levels that we're going to want to pay attention to. Now, the hours specifically that we want to be looking to trade is between 7 a.m. to 10 a.m. Now, it's not like yesterday where we have news at 10 a.m. So you can kind of narrow down the timing window that you want to get into the trades, which is an hour before news, and you ideally want to hold it until an hour after news. So yesterday we started entering the markets at around 9 a.m. The move happened at 10 a.m. and it was pretty much done by the time 10:45. So yesterday was a lot more clear. Again, another beautiful thing about news days. Today we don't have news, so the general timing within 7 a.m. to 10 a.m. is going to be valid in the event that you want to take a trade. So at 7 to 10 a.m., for example, let's say you're sitting here, by the time 8:30 a.m. rolls around and you start seeing price start dipping on the 5-minute chart, that's going to be your signal to go short at that moment. And you're going to target to, or potentially even just target the relatively equal lows that we've marked out just now, if I can find it. So it's going to be right here at 101 to 500. So that's going to be target. And by the way, speaking about relatively equal lows, like how beautiful was yesterday, where we completely sweat out the relatively equal lows. We just targeted these relatively equal lows before chilling for the rest of the day. Again, you can't make this stuff up. These are smart money concepts. We trade in line with the institutions. This is exactly what I'm going to be breaking down in the masterclass. It's exactly what I teach inside bootcamp as well. And yeah, it's a system that works. But otherwise, on the 1 hour chart, that's about it. Let's go down to the lower time frames. So at the moment, you have Asia, London kind of broke out of Asia. So in the event that you get a retrace, again, you're just looking for continuation towards the downside. Now, there is potential, of course, that price could shift into a bullish direction. But as I mentioned time and time again in this, like throughout my 300 days of making these daily videos, is that when we want to go into a short trade, we want time frame alignment. Is that when we want to get into any sort of trade, we want time frame alignment. So in the event that we are looking for longs, we want the daily time frame to be pointing towards the upside. Today's pointing towards the downside. We want the 1 hourly time frame to be pointing towards the upside. And at the moment, the 1 hourly chart is as bearish as it could possibly look. So no time frame alignment there. And you want the 5 minute to also point towards the upside. So even if we end up getting some sort of, oh yeah, the market looks good on a long, we're not going to take it because we don't have time frame alignment, and we're not going to have it until at the very minimum tomorrow. If today's candle closes bullish, tomorrow we could potentially jump into a much more confirmed reversal. Rather than trying to just catch falling knives, oh yeah, I think the bottom's going to be here, so I'm going to buy into it here. Let's just say that's not generally a very good idea. And also, this is the exact same kind of like framework that's allowed us to just prevent ourselves from getting, chopped up or faked out by, false moves. There's been so many instances where the market looked good to go to the upside. If you're part of the people that, have been following me especially over the course of the last 3 weeks, we've navigated this, very tough market condition, this very bearish market condition, by the way, beautifully. And what I'm discussing right now, time frame alignment, is a huge reason why. Ultimately, we trade what the market is telling us, and so far, market is looking pretty bearish, so we're just going to follow suit. Anyways, Ethereum is looking very similar to Bitcoin. This remains the daily target, of course. 1 hourly chart is looking pretty bearish as well. This is your order block right here, and that is your fair value gap. Same exact setup as Bitcoin. Personally, I would prioritize Bitcoin just because it's a little higher probability at the moment, but so far, not too much to discuss with ETH. It's looking pretty similar. And I'm pretty sure it's going to be the same story with Solana as well. Solana, yeah, looking pretty bearish. But again, I would focus on Bitcoin if possible. Solana is actually could be a better setup compared to ETH, because unlike ETH, where you have a order block and a fair value gap, in terms of Solana, you have just a fair value gap. So in the case that you jump into this fair value gap in between the hours of 7 a.m. to 10 a.m., that's going to be a valid setup. Look for the CISD on the 5 minute chart, and you're going to be able to take a nice, beautiful short trade. I will keep you guys posted on X if I post any live trades. And if you guys have any questions about the long-term kind of like outlook for this, feel free to drop it down in the comment section below. I'll try to, just get to it. If you want to share some different points of views in terms of the long term when it comes to Bitcoin and the overall crypto market, maybe stuff that I have not considered, feel free to post it down in the comment section below. I'll be happy to look through them and potentially discuss them in tomorrow's video. But until then, I'll catch you guys tomorrow. Ciao, ciao.